Let's start off the show by telling you about the experts that will be joining in to discuss today's very volatile day of trade. Manish Sonthalia, Senior Vice President and Head Equity Portfolio Management Services, will be with us from Motilal Oswal Asset Management, and Sandeep Sabharwal, Market Expert, on the show. It was the monetary policy that was key in focus. So, Manish, would like to start off with you and your opinion on the same. It did come as a negative surprise. Nobody was expecting the RBI governor to move on the upside when it came to hiking rates. Markets were down in a measured manner. With this kind of news, the Nifty should have perhaps cracked by more than 100 points. What's your view?
Yeah, so I think, the Fed meeting concluding tomorrow, that is going to provide a decisive direction to where emerging markets are headed, because the fear remains that if there is a further increase in $10 billion tapering, it's a bit too early to call it an emerging market contagion, but, who knows how the currencies are going to react. So I think the decisive direction on the markets would be provided tomorrow evening or tomorrow late night or whatever.
Sandeep, of course, a lot has already been discussed about the Argentinian crisis and the emerging market currency crisis, but it did not really elaborate itself into a full-blown crisis yet. Let's talk about the big macro factor which passed by, which was the RBI meet. What did you read from a market participant standpoint from the commentary of RBI governor today?
See, I think the RBI policy was a prudent one in my view, although most people were not expecting it, but there was some feeling in the mind that he could do this, and I think the main reason is not inflation. I think the main reason is like what was being talked about, the emerging market contagion. I think it was more a move to give a signal which would be supportive of the currency rather than having any impact on inflation in the near term. So I think, but obviously they won't spell it out like that. And the prudence of a policy on whether it's prudent or not is more clearly reflected in the way your currency behaves post-policy. We saw when Subbarao was the governor, every policy action was met with fall in the value of the rupee. And today we've seen the rupee move up quite sharply. And that reflects that as far as macroeconomics goes, this seems to be on the right track.
Sandeep, can't help but ignore, touch upon Maruti Suzuki. That was clearly a stock in focus today. And barring the numbers, which were operationally fairly decent, what really spooked investors was the fact of the announcement that the parent Suzuki will be setting up a wholly owned subsidiary in Gujarat. You saw the stock price reaction. It tanked immediately by close to 9% on the back of this. Now, investors really fear that Maruti will not reap any profits from this plant. There have been some clarifications from the management. But run us through what you really made of this news.
So I think the logic is very difficult to understand, because Maruti makes 90,000 to a lakh cars a month. It sells it, so it's 12 lakh odd cars a year. And they're talking about an initial capacity of 1 lakh cars which will come up by 2017. So it's a small capacity relative to the overall size of Maruti. Then they say that Maruti has cash and cash reserves of 7,300 crores. So, taking these factors into account, it's difficult to understand why this step has been taken, because then they are saying that the parent won't make any money, and the money that the parent makes will be through the company. So I think people are finding it difficult to digest it at this stage. However, historically, what my observation is that normally when such events happen and there's a knee-jerk reaction, typically if the fundamental play is strong, then the stock will normally bounce back. And that's something which we could see in Maruti also going forward. And I think one big reason for the sell-off also has been that there were a lot of expectations which got built up with regards to the parent actually increasing stake in the listed entity. Right. And I think that goes out of the window now.
Right. In fact, they had clarified today in the conference call that there's no immediate plan to hike stake by the parent in that particular company. But when we spoke to a couple of shareholders, large institutional shareholders, they were not very convinced from the arguments the company did give out in the conference call itself. Ashwini also joins in. Ashwini, tell us, what's your view in Maruti? I mean, the speed and the volumes with which the stock has fallen today, and even the adjusted rates were at the lowest point of the day. And of course, the commentary is not very convincing. Are you anticipating more downside in Maruti in coming days?
Well, any stock that runs up 80% and where industry outlook is not the most positive, this was, waiting to happen. I mean, had it not been for this news, it would have happened because of some other news. So basically 1800, 1750, that has been a historical high for Maruti. And, that's the way stocks move. It comes down to 1000, 1200. Again, you start hearing positive stories. So that's how stocks are manipulated. Stocks are run by, the informed circles. So it's quite clear that Maruti is now in a downtrend, and we have not seen the end of the downside.
Let's talk about the big earnings which will be coming out tomorrow. Of course, out of the private sector pack, ICICI Bank will be declaring the earnings, and of course Bharti Airtel, along with the oil and gas space, GAIL India. But talking of ICICI Bank, we are expecting about 10% net profit growth this time round. NII growth should be over about 20% or thereabout. Most of the peers of ICICI Bank have managed to at least handle the asset quality this time round. Let's see whether ICICI Bank also does it or not. Sandeep, what's your call on this particular stock? It was, ended almost with days 1% gains. And compared how the performance of some of the other private sector banks been, what's your call on the valuations?
ICICI Bank unfortunately doesn't get credit for what it's done under the current chairperson. The current CEO actually has de-risked the model quite significantly. And ICICI today is not the same kind of risky bank which it used to be 3-4 years back. It's one of the banks which has one of the highest capital adequacy at around 18-19%, and it doesn't need to raise funds for growth going forward. So I think we'll slowly see the valuations of ICICI improve going forward, and in the banking pack, this bank is one of my top picks.
Okay, that's the call on ICICI Bank. But among the telecom stocks, we will be having Bharti Airtel declaring its numbers tomorrow. Expectations are that it will be a fairly healthy quarter for the company, 1,035 crores in terms of the net profit. You are expecting this time around that the consolidated margins will also rise by something like 50 to 60 basis points to close to 32.5%. And the Africa revenues are also expected to grow by 3% on a sequential basis. Ashwini, run us through what you make of Bharti Airtel and how the stock is looking on the charts.
See, it's a very range-bound stock, and recently all of telecom is breaking down. So basically once we break levels of 300, even 260 is possible, and the odds of that, whatever be the results, are fairly high, because all Idea, Arcom, Bharti, everything is traded at is being traded at the lower end of the support. That kind of started their bear market even before the Nifty started its correction. So unless we are able to hang on to 300, there could be more downside on Bharti.
Pull up Jyoti Labs and Just Dial intraday, and you would see almost stark variation in the performance. Just Dial at one point in time was taking a knock of around 17-18%. Jyoti Labs on the other side, in fact, gained about 2-3% in intraday, but of course lost out. 13% is the net loss on Just Dial. If you talk of the third quarter numbers, Sandeep, you would see Jyoti Lab expanding margins. Profitability was also over 50% higher on a YOY basis, whereas Just Dial hardly managed to somehow manage, the margins. Profitability was under pressure. How do you look at consumer space and these two particular stocks in specific?
So I think most of these stocks which are typically perceived to be very high growth, innovative stocks where people believe that the growth can be very, very strong, like Just Dial, and previously we had this company Jubilant Foodworks. So the stock prices run very much ahead of the actual delivery potential. And what we are seeing is a corrective move which might take the stock back to reasonable valuations, because I believe even at this price it trades at valuations which might be one of the highest in the overall markets. Similarly, Jyoti Labs is a turnaround story. It's not a very liquid stock in terms of stock availability in the market, belongs to the consumer space. So it reported strong results, but again valuations are still 30 times plus. So one has to be cautious on these stocks at this point of time.
Manish, how do you think 6350 will now act as a higher watermark for the market?
Absolutely not, Nikunj. I think these are only correction. These are times only for a correction. I would take it personally as a correction only. I think another 100, 150 points down on the Nifty, whatever the technical levels are, 59, 50 or thereabouts. These would be great times to buy again. And, we are headed much higher. I mean, that much is for sure. Whether it happens today or tomorrow, that's for time to tell. But I think these are only correction.
Ashwini, how did you look at the Bank Nifty intraday moves, and especially some of the PSU banks which recovered, not only recovered, ended at in the green very comfortably. How did you? Any other interesting name which come to your mind for a trade there?
See, all banks need to be shorted from here. Now, at which point you will go short, that is an individual call. And chances are all rallies that you may get on the Bank Nifty should end before 10,700, 10,800. And around those levels on all PSU banks, see, the market has been slammed for 2 days. Yesterday because of that global crisis, today because of RBI. So I think some short covering is probably due. So that would give you opportunities to go short on all of these banks. All are in downtrends. So it really doesn't matter which PSU bank you choose to go short.
We're highlighting some of the top stocks to keep on your radar. We'll start off by going across to Pranay. He joins in from our research team to highlight what exactly the dealing rooms are advising. Pranay.
Despite the glum closing on the bourses, we are getting two buy recommendations coming from dealers. One on Ipca Labs and the other on Bajaj Auto. Ipca Labs for the day closed up 4% and scaled to record highs after posting stronger than expected third quarterly earnings. Its top line saw a jump of 17%, driven by 16% growth in domestic formulations and 20% jump in the export formulations. Remember that the export income accounts for nearly 2/3 of the overall revenues. And segmentally too, the API as well as the formulations both grew in high teens. If you look at the margin performance, it saw an expansion of 390 bips. But if you still exclude and account for the exceptional items as well as the one-time, the margins still came in higher than 25%, much above the street estimates, and the profits too saw a jump of 36%. Not just that, the management has reaffirmed its guidance of maintaining margins of well above 24% going forward, and that's a big positive, which is why dealers are recommending a buy, and they see the stock touching levels of 880 in the medium term. On the other side, you have Bajaj Auto that has snapped its 3-day decline, and institutional desks are indicating of strong accumulation. Analysts too are indicating that the domestic two-wheeler volumes, which had slackened to multi-year lows, in fact 4-year lows, have now bottomed out, and the refreshed product launches which will be coming up in the next couple of months is something which will help it revive the lost market share in the Discover brand. While its market share remains firm in the Pulsar brand, also it is seeing very strong demand in export markets such as Africa and ASEAN, and that is something which will give it a margin fillip going forward.
Thanks for that, Pranay. In fact, apart from Maruti, Bajaj, Tata Motors, even M&M was trading firmly in the green despite of overall weakish kind of market. Sandeep, what are the specific stock ideas you would like to share with our viewers or come to your mind as a trading or maybe a positional bet for next couple of weeks?
See, I think positionally, I would say that right now people should be slightly cautious if we are just looking for a couple of weeks, because the global equity market correction doesn't seem to be over to me. So although domestically we've seen a big down move, but the global corrective move could still continue. So I think that's why one would be slightly cautious. But beyond that phase, I would say the banking names like ICICI Bank or SBI among the larger caps, or these oil marketing, PSU oil marketing companies like IOC, BPCL could be good bets.
Ashwini, what's your call in terms of buy and sell recommendations on the charts?
Well, Bajaj Auto is a buy with a stop of 1920, target of 1960. Tata Com is a sell with a stop of 278, target of 263. And Syndicate Bank is a sell with a stop of 87, target of 75.
Manish, what's your opinion on IT and pharma stocks? Do you think stocks from these areas can continue giving good returns?
No, obviously, when the Fed announced tapering, it was a given conclusion that currency is going to depreciate. and it was expected to depreciate moderately, to reach 64, 65 over middle of 2014 calendar year. So now we are headed towards those levels. US growth is picking up. If you see the new TCVs that have been won by all the major IT companies, they've been quite healthy. You have HCL Tech, which has won 15 large deals, totaling TCV of $1 billion, and similar numbers for Infosys, etc. So I think given the growth, there is opportunity in the IT space even from these levels, maybe not a 20% sort of a return from current levels, but definitely a 15% sort of a return from current levels is possible. If we see margin expansion, given that reinvestment into the business doesn't happen, so sales and marketing costs are contained, you may see the growth coming in at more than 20% in terms of stock price appreciation even from current levels.
All right, gentlemen, we'll leave it on that note. Thanks so much for taking time out and joining in with your expert opinion right here on Markets Tomorrow. And on that note, it's goodbye from Ajay, me, and everyone that put the show together. We'll see you same time tomorrow.